First of all, I want to thank Therese. She did a phenomenal job of what's new in SME finance at the last panel. I actually didn't realize that Capilendo had done an STO, which I think is really, really interesting because there's a lot of discussion about the future of digital assets. And I kind of assume that securities are going to become digitized. It's going to happen. It's just how long is that going to take and what form it's going to take. So the more I listen and learn about that, the better I understand it, the better vision to have is going forward, how this is going to evolve. But right now, we have a different discussion going on, and we're going to talk about trade finance. And in all honesty, I have to be honest, I don't know a lot about trade finance. I know a lot about fintech, but trade finance to me is kind of opaque. It's an absolutely enormous industry. I kept Googling trying to find out how big it is globally, and I found $14 trillion, $39 trillion. There's all these big numbers being tossed around out there. You guys know better than I, but from my world, as soon as I see trillion, that's big, right? Trillion's big, billions, yeah, who cares? Trillions is big. Now we're talking real money. So these are these guys here on the stage that are targeting a sector of finance that is absolutely enormous. So I'm going to kick it off and get started here, and I'm going to ask each of these guys. We'll start at the end to say who you are and what your platform is, where you're from, what you're doing right now. So start at the end there. Thank you. Cedric.
So hi everyone, so I'm Cedric Teissier. I'm the founder and CEO of a company called Finexkap. So it's a platform that operates primarily in Western Europe. We provide working capital financing solutions to SMEs, independent workers, so including factoring and short-term lending.
Good morning everyone, my name is Cedric Breu. I'm a Frenchman who has been in the US for about 20 years. I'm the CEO of Taulia. Talking about big numbers, around the world, the amount of commercial payments is about 120 trillion. It's a lot of money. About 80% of that is on open account, and not much is ultimately financed. So at Taulia, our mission is to provide financing to businesses around the world. Last year, we financed about $25 billion. We have 2 million businesses connected to our network in 168 countries. And we want to keep going with this because there is a strong need ultimately.
Yeah, my name is Nelson Holzner. I'm the CEO and co-founder of Modifi, a fairly young platform, and the dwarf against Taulia, for example. What we are doing is providing small and medium-sized companies with short-term credit on an order or invoice basis. Also on a global platform, still much smaller than yours, but I think for a year in operations, we cover 30 countries already, growing quite nicely. And we also see a very strong demand for very flexible digital options for small and medium-sized businesses to trade internationally. So we are more in the cross-border financing arena than the domestic financing.
Excellent.
Hi, good morning. I'm Federico Travella. I'm the founder and the CEO of Novicap. We are building the operating system for working capital. So we work both on the receivables finance and payables finance side. We originally set up a shop in London 5 years ago. We're now the biggest non-bank lender in Iberia, so Spain and Southern Europe. And we're right now expanding more towards Northern Europe.
Excellent. So, like I mentioned, for me, trade finance is you get this big container and you jam a bunch of televisions and rubber toys in it and you throw it on a boat and it disappears for a couple weeks. And then if you're lucky, it shows up in some port somewhere and somebody may get paid or not. It's all handled by telephone calls and faxes and paper. That's kind of my Byzantine perspective on trade finance. And I'm like, this is antiquated. It's kind of a mess. But that's part of the issue that you guys are addressing right now. So Nelson, in your world, how are you transforming that relatively analog ecosystem to jump forward into the future of digitalization?
Yeah, I think the beautiful thing I think about trade finance, and we have founded another business in the fintech space 10 years ago, is that it's it's massive and it's massively broken. So I think that's always a very good
Massively
opportunity.
broken. There you have it. You know.
So I think every week we still run into cases where we simply can't believe how burdensome it is, even for us as a facilitator, I would say. And I could go on to tell war story forever, but I think it really comes down to really helping and automate core processes, which banks are really not very, very good at. It comes down to the onboarding, KYC, AML, which takes typically weeks and months, and it's very, very costly for banks. Onboarding an international customer for major banks costs around $15,000 to $20,000, which money you have to actually earn back from small businesses. Very, very challenging, I would say. We do this basically in a matter of 1 or 2 days, typically, for onboarding. Then the whole underwriting is still also very, very burdensome. Lots of banks want to have like extra heavy security. We typically don't ask for additional security, so all these things can be streamlined. Can they be fully automated? I have my doubts, to be honest. But if we only, I think, bring it down, to 30% of the pain, I think that would be like a massive way forward already. And I think this is also the mission we have. We want to onboard people, allow them for self-onboarding in 10 minutes. We look at the stuff they have onboarded, we look at the trade documents, but we don't touch papers, and we don't go back and forth if we can somehow avoid it. So very different approach, I think, to rethinking the entire process.
All right. So I'm going to ask you, Cedric, what's your perspective on the same question here? We're taking a very analog process and digitizing it. Teissier, I'm going to start with Teissier.
Yeah, sure.
Okay.
That's me.
Two Cedrics.
Yeah, it's a complicated science, honestly, to digitalize such a complicated industry. So you need to start with simple, basic, practices that allow our clients actually to experience the financing more easily. So for us, that included the fact of providing an embedded service directly onto other software providers. Let me explain that. Technically, you're selling goods or services, you go on a website, you're on a marketplace, for example, and you can actually have the payment of your transaction directly embedded within that marketplace. And that's how actually you can have a better user experience. But Nelson actually pointed it out. It's a question also of simplifying the experience of our clients that at the end of the day really makes it changing.
Okay. So Federico, when we were talking the other day, you mentioned that you guys are building an operating system for trade finance. Can you explain to me again what you meant by that?
Yeah, with operating system, it means that eventually we're trying to embed ourselves in all the systems which are touching either receivables or payables. So we already discussed a couple of times, or was mentioned already a couple of times on the panel, that it's a huge market, right? And it's also
huge.
Massively broken.
Yeah.
So just to quantify it again, I think you got close to the number, like 39 trillion, but like at any given time, there's about 40 trillion in receivables outstanding, right? So globally. And if you look at all the commercial finance products on the market, right, whether it's factoring, supply chain finance, and so on, it's only touching about 5% of those 40 trillion, right? So what we're seeing right now, and this is why we also call it the operating system for working capital, is that with the digitization trends that we see, supplier networks, e-invoicing, supplier portals, networks, and so on, we're able to capture much more of those streams. And so that's what we were trying to do, is that we actually think that the market, or the addressable market, is increasing by 10x in the next 10 years. Because first of all, the spectrum of suppliers that can be accessed is higher. So it used to be, for instance, on the supply chain finance side, that only the short tail of suppliers, or the biggest suppliers, would be eligible or be financed by supply chain finance programs, which is now being brought down more towards a long tail of suppliers, smaller suppliers, indirect spend, and so on. So that's a massive market which is opening up. At the same time, given that invoices are becoming digital, right, electronic invoicing, they're being captured quicker. It also means that the speed, or the time frame over which you can finance a receivable or a payable has increased a lot. So these two trends for us were very attractive since day one, and so we're trying to embed ourselves in all the technology partners that we can access to capture that flow. So from that perspective, it's very much an operating system because we tap into ERP systems, we tap into small bookkeeping system and so on, and we're trying to capture that flow in the most efficient way.
Okay, so that's interesting. So Cedric, the other Cedric, you guys are a little bit different because we were just speaking before the panel, and you mentioned that you are working with Airbus, which is not a small company. You actually work with a lot of really big companies. So how are you different than some of these guys on the panel here right now?
Yeah, so the opportunity we saw is that the largest providers of liquidity for small businesses and businesses around the world is really factoring. And factoring is a one-sided model. The liquidity providers take the risk of the businesses directly. That requires a process to onboard them, assess the risk. There are losses against that. The opportunity we saw was really to take advantage of the data that is between the businesses and their customers. So ultimately, what we are building is a network that connects the largest companies in the world, and Andrew, Airbus is one of them on our network. We've got companies like Vodafone, Halliburton, Pfizer, very large companies around the world, and all their suppliers. And by having access to the data that is flowing between those large companies and their suppliers, we're able to know that those invoices are legitimate. So we are addressing the fraud at the core. We know that what we want to finance is ultimately true because it comes from the ERP system of the customers. We know that those invoices are approved by those customers, and that forms the basis for the financing of the transaction for us. So that helps us to onboard the suppliers really fast. In factoring, you can go from weeks sometimes to onboard the suppliers to a few days. For us, it's 90 seconds. In factoring, the advance will be around 80% of the invoice amount. For us, it will be 100%. And then for rates, I looked at that yesterday. We finance transactions at 0.2% for a 30-day advance, which is equivalent to a 2.2% APR. So again, the data is the asset for us, and it helps us to provide liquidity very fast, very cheap, in a great user experience for the businesses.
Okay, I have another question for you, but first I want to ask the other Cedric. So for my introduction here, I saw trade finance as something very basic, and I was kind of wrong, but really it's not just the shipping containers, it's factoring, it's invoices, it's really where direct lending has, because of the nature of economies in the European market specifically, it's really all of that is trade finance now. So if you're doing factoring, you're doing trade financing. And so you guys are all pretty much doing that, right? Is it?
Yes, yes. Yeah. Technically, what we do at Finexkap is, I would say, digital factoring in the sense that we provide financing to companies against their invoices, outstanding invoices. So they can do it either on our platform, so it's finexkap.com, where they register and apply for financing. It takes not weeks, but it takes probably about 5 minutes actually to register and apply for financing. Or we do it directly, as I said, in embedded environments. So we connect to ERPs, we connect to accounting software, between marketplaces, electronic invoices software, so that the user experience is, I would say, transformed directly into that other environment for our clients. And what we do as well is we provide buyer finance. We also provide to professional clients the capacity to defer the payment of their outstanding payables. So to give you an example, you go and you need to buy stuff at a Metro as a professional client. Now you need to actually pay directly when you check out. What we do is we provide point-of-sale working capital financing so that those clients can actually pay at 60 days, 90 days, a longer term. But it's always in a B2B payment situation. That's how we operate.
Okay, Federico, do you have any thoughts on that?
Not really, actually.
Okay, you don't. All right. That's cool. It's your industry. You don't have to talk about it. So I want to jump back to Cedric Brou. So we were talking the other day, and you guys have financed, like, in your history, $1 trillion. Is that right?
So we financed last year 25 billion. I think our history probably done something like $110 billion.
Okay, so it's a lot of money. All right, so I was close. But I asked you, I said, what is your default rate? And you gave me what I thought was a surprising answer. So what is your default rate?
So the default rate we have at Taulia over the lifetime of the company is actually 0. And for people who are in credit, that may raise a question: how can you really operate a financing business with a 0 loss?
Yeah, you're cheating, right? I mean, what do you?
We do not cheat. But again, going back to the example I took earlier, we use data to be able to finance a transaction. So again, what we will finance at the end of the day is a transaction that is coming from the ERP system of the large customer of the business, Airbus, for example.
Yes.
So we know this invoice is legitimate, we know it's approved, and we get a guarantee of payment from Airbus to us. So Airbus gives us a legal commitment that if we finance their suppliers, they will pay us back in full at maturity of the invoice. And typically when Airbus sees an invoice in their ERP system, like SAP, they approve it and they give a legal guarantee to repay, they do. So again, over the lifetime of Taulia, we've never had any losses because those large companies pay the invoices that are approved, and we see them.
That's free money in my world. I mean, if you have no risk, that's kind of cool, right? You know, that's a platform I want to invest in that has 0 risk, and I actually get a higher rate of return than I can buy in T-bills, right?
Yeah. But the cool factor, what is really cool actually, is that investors like it because this is very low risk return.
No risk. Yeah.
But the main beneficials are the small businesses.
Right.
Because of that risk profile, we are able to provide very low rates. Our mission ultimately is to fuel the economy by helping small businesses in particular to have access to great liquidity. And we want those small businesses to be the first beneficiaries of those low rates.
So the 2 characteristics that are kind of your secret sauce is the fact that you're already tied in to the ERP platform. So SAP loves you. You tap in there. Their customer gets, you know, immediate cash when they need it. There's a small fee for it that is pretty much guaranteed because if the deal goes bad, they're going to cover it anyway because it's Airbus. So that's really cool. Now you're integrating as well with ERP. So what's your default rate? Is it about the same or?
It's not 0. I would love it, but it's not 0. No, normatively, the loss rate is very low still.
Okay.
We lost about 0.06% of the
Okay, that's pretty
origination. Low. But it's very low. But we didn't originate 25 billion last year, I'm afraid.
Not yet.
Much.
It's coming.
Yeah.
Give it a year or 2.
We've been in operations for the past 4 years, and we finance about 350 million. So much smaller.
Well, that's not a small amount. It's a good amount. So you guys, I don't think you're integrating, nor are you with ERP programs. So, but you're dealing with a smaller clientele, correct? Both of you. So the risk is higher. So for you, what are your default rates?
Yeah, the risk I think is indeed harder, but our default rate is still also 0. But I think they will not stay like it forever, I guess.
Oh, wow.
Yeah. But yeah, I mean, like given the limited number of years we've been operating, I think that's also. I mean, like it's a good result, and we are proud of it. But that's not going forward. I think the model we pursue. I think we do also believe in extra data and in integration. And in my previous business, I actually integrated to hundreds of ERP systems from subsystems and merchants of the same size of our current customers. I think it is a great business model. It's not our business model at the moment. So we really are not focusing so much on having a large buyer who brings us all the suppliers. Beautiful business model also, but not ours. We really try to power the guys who also trade from SME to SME because this is where the pain is really the hardest, I guess.
Right. Yeah.
And hence you need to somehow need to come up with new ideas of how you actually get to those customers. And my take at the moment is that we don't get to them through hundreds of integrations of ERP systems around the world because every market is also different. It can be a very good solution when you focus on certain markets or on very large suppliers who are then again worldwide. When we are tackling small businesses around the globe, we simply don't want to spend too much time on integrating into hundreds of ERP systems. What we do love, though, is alternative data, which is actually more or less available to everyone, but nobody uses it. So we are very much believing in the power of trade data, for example. That is in the base of it, it's customs data, and we enrich it very, very heavily in the markets we are in. And that gives you a very, very interesting picture of what trade is actually happening, even though you're not integrated with a large customer, right? So, for example, we are in India, and we know basically for the last 3 years, every single cross-border trade imports and exports into India on an order level. Yeah? Nobody really looks at that kind of granularity in the data at the moment. And we are trying to, to really leverage that kind of data. We also try to leverage data from one of our investors, Maersk, which is the largest container shipping company, probably running the largest B2B trading network in the world at the moment. And we have some very interesting projects there where we also kind of verify information, verify customers, verify especially suppliers in countries where you have limited information which is really reliable. Let's say when we operate with an Indian exporter, small business, family-owned business, 2 million revenues, there's literally no reliable data out there. Yes, they produce annual accounts, but in all fairness, it's not reliable, right? So the question then really is for us, how do we get our hands around them? Is this a fraudster or is he a legit business partner, right? And then trade data all of a sudden opens the door and we can really see, okay, this particular exporter has 20, 30 customers in North America and Europe, and they had a frequency of trades with a specific interesting buyer who is maybe a very reliable source, because otherwise they wouldn't continue to order. And if you have those cases, that gives you a very good understanding of, are these guys legit or not, right? And this is what we find very interesting in kind of getting our hands around, countries, lack of information in markets which are underserved. And this is, I think, what we try to leverage in the next few years and kind of build a scorecard around that.
So that's really good. So you're not doing the integration yet, maybe someday, but your default rate has been 0, which is a good thing, right? So now the question comes to you. What type of default rates are you experiencing?
Historically, we have a default rate of 50 basis points.
Okay.
So it's not that high. To be frank, actually, I think it's healthy to have some defaults. Because eventually, if you want to build out a financial services company for the long term, you need to build up that collection and that muscle to also collect monies where invoices or receivables become overdue. What we learn a lot on the risk side is that there's a lot of risks here that are at play. It's not just about credit risk, right? Which is eventually the risk of a default, typically on the debtor side, right? On the party that has to pay the receivable at the end of the 60, 90 days time frame. And so we've learned a lot that very often the other risks that are at play, such as legal risks, think about prohibition of assignment, right of offset, dilution risk, performance risk, fraud risk. These are usually the drivers of losses in our industry. So I think having some losses on the credit risk side is a healthy thing. I even would say that if you don't have any losses, you're not aggressive enough. Of course, you need to find the right balance. But in our experience, the risk of fraud, dilution are much more severe, more significant than credit risk. So except if you do SME transactions, that's of course where the credit risk is high. But if you typically have a debtor or a counterpart which is quite credit-worthy, I would say fraud and performance risk are much more important.
Have you seen much fraud?
We do. We see fraud every day.
Do you really?
Yeah. It's quite entertaining in a way.
Well, I'm glad it makes you happy.
We get fraud attempts every day.
Fun with fraud, right? So
we get a lot of those attempts, but that doesn't mean we finance them, right?
Yeah.
Yeah.
Okay.
We, as a good example, we get fraudsters attempting to either it's collusion between a supplier and debtor. It can be fake receivables. It can be fake tax statements. You name it. There's hundreds of cases, but we learn from those every day.
Right.
So every time we have a fraud attempt, we learn about the company. We know their UBOs, we know their shareholders, their suppliers, their debtors, their directors, their employees. And so this way we can build a very interesting, almost three-dimensional fraud network. And every time we have a new fraud attempt, we very often see a connection. So very often actually we we've had cases that, for instance, in Spain, the Policía Nacional, so the equivalent of the FBI, comes to us with a question like, hey, we're looking at this financial crime case in which there's a group of financial fraudsters which has defrauded Santander, Sabadell, you name it, CaixaBank, all the banks for a couple of millions. And from our records, it shows that they've also tried to apply for working capital with Novicap. So what made you not finance the company?
Okay.
And so that's where we very often see, okay, we're already much more advanced than banks, especially when it comes to fraud risk. And the only reason banks are able to absorb them is that they're so big.
Right.
Because the NPL rates at banks are actually are single digit. They just have huge books. And that's why they're able to absorb those fraud losses. So right now in Europe, I would say that no bank is as prepared for combating fraud risk as we are.
So, in effect, it all comes down to the data. The data is what enables you to manage that risk. And you guys are doing it similarly in many respects, and some of you guys are doing it a little bit differently because of the integration, which gives you a step up in managing that risk. But from my perspective, 50 basis points for default, that's pretty good, especially if I look at consumer credit or banks, right? That's pretty good. So you guys are all, in my world, doing pretty well. So then that comes to the question, Cedric, Brew, what type of rates are you charging for this this free money that you're making with this really cool business?
So ultimately, our goal is to offer a rate that beats whatever alternative businesses can get from other type of financing solutions. Our rates, I checked yesterday, we finance transactions at 0.2% for a 30-day advance, which is equivalent to 2.2% per annum. And then we will go into the 6% or 7%. But our goal is not to charge as much as we can. Our goal is to create a win-win between the customers, the suppliers, the financial institutions, and make sure that everyone can drive a margin out of that. So a LIBOR plus 100 basis point is very typical for us.
So that makes a lot of sense to me. But for the company that's paying 6 or 7% and you have a zero default rate, I mean, your investors must be pretty happy with that, wouldn't you say? Yeah.
Sure. Yeah. Absolutely.
I mean,
yeah.
I'd be happy with that.
Yeah. So we can secure liquidity at LIBOR plus 50 basis point and lend that LIBOR plus 50 for some, and for some a little bit higher, so that we drive a margin for the investors. Yeah.
That's a good spread. So the other Cedric, Teissier, what about your rates?
So it's much more expensive than Taulia, for sure. We price usually between 10 and 20% APR.
And you have zero, very low default rate.
Very low default, yes, but it's still much more expensive.
Okay. Nelson?
Yeah, we are at between 6 and 12% APR per annum.
With a zero default rate, right now.
At the moment.
Cross your fingers. I've just jinxed you. Tomorrow.
Yeah. No, but I think it also depends really on the size, the risk profile, and the market, right? I mean, like when we finance people in countries where there's simply no access to capital, why would we price necessarily like 3-4% if they would, from like their normal local banks, being charged 12 or 15%, right? So I think there's no need for us to kind of win over price. I think for us it's really more like win over convenience and flexibility.
So what are your rates like? Are they like Nelson's then?
We're pretty low, and I mean we had to adjust our rates over time to the market, right? And as you know, we live in a a negative interest rate world,
right?
Which is I think a problem for all of us, especially I think more on the factoring side. So our rates are between 1 and 6% per annum.
Okay.
So we do also finance transactions where we make a loss, and the reason is that we have a very long-term view on the company. So it also means that we believe it's a volume game, right? So and over time, as your volumes grow, your cost of capital goes down, and eventually you will make a bigger profit on every transaction. But it's a range. The maximum we will charge all in is like about 10% APR.
Okay.
Yeah,
All right.
as a max.
That makes sense. So as except for Taulia, Taulia's been around for a good amount of time.
10 years.
10 years. But the other guys, you're more early stage. Cedric, Teissier, how are you acquiring customers? I mean, you don't post Google ads for this. It's got to be word of mouth, right? I mean, what do you do?
Yeah, clearly we hate actually people actually clicking on AdWords, because that's the exact client you don't want. The one that is like just looking for urgent cash injection is not the one you would like to have. At the end of the day, you need to think about the cost of acquisition, which is crucial in our business, especially given that our value proposition is deprived of any commitment in terms of duration or volume. You can sell one invoice and never come back. So I need to make sure that the cost of acquisition is low enough and that the unit margin is high enough so that actually it's worth engaging with the clients. What we found at Finexkap is that doing that directly, attracting B2B clients, is not effective. It's too costly. So what we find the most efficient is to have partners that have B2B relationships, be they their clients or their suppliers. So we partner with those guys. We leverage their sales and marketing efforts because those guys are actually nurturing their clients or their suppliers. And we attract the flow of the B2B payments. So our partners can be, software providers. I mentioned some of those. We work a ton with B2B marketplaces. For example, we finance all the independent workers in France that use marketplaces to find missions. I don't know if you guys know Malt, Comet, all of these guys. So we connect with APIs so that the independent workers actually find a mission on the website. And at the end of the day, when the invoice is submitted to the clients, we absorb it digitally through our APIs, and we provide instant payment to the independent workers. That strategy makes it so that the cost of acquisition is virtually inexistent. For me to finance a new independent workers on those marketplaces, nothing. The only thing I need to do is the KYC because we're regulated. So I need to make sure that I'm not laundering money. So I need to make sure that the independent worker is someone I can engage with. But that's the only thing. And we started again 4 years ago. So initially, our platform was the most visible, finexkap.com, attracting B2B clients. Last year, roughly 70% of new clients come from these partners. Yeah, so it's proving actually quite efficient.
Nelson, you're dealing with a smaller clientele. How are you finding customers?
Yeah, I mean, I think it's a whole mix of channels and means, right? And distribution, I think, is a holy grail of any startup because customer acquisition costs, especially in fintech, typically kills businesses, right? So what we are trying to leverage again is also the mere fact that every transaction actually has in our system a buyer and a seller, and sometimes we finance a buyer and sometimes we finance a seller. But the beauty is, whenever you actually do finance a trade, you always have a counterpart, which is yet another potential lead for you, right? So when we, for example, finance buyers, German buyers sourcing with like some, 40, 50 suppliers in Asia, for example, we get basically, those suppliers through our transacting on behalf of the buyer, right? So all of a sudden we have, for example, we will enter China later this year, but we have already some 50 Chinese companies on the platform because they receive money from us, like frequently, right? So then kind of approaching those customers or those potential customers as real customers for an export financing is much, much easier for us, right? So we really try to do it a bit like money remittance and payment services businesses, right? You always have like someone who pays and someone who receives money. And the PayPal guys, I think they became big because they sat on someone else's network on eBay, but they also were incentivizing like both parties to use the service. And that's a bit like how we try to create those wonderful network effects. But there's also, in addition to that, very straightforward cold calling, cold emailing. In India, WhatsApp works extremely well, for example, even in the business context. So we are also experimenting for every single market what the best marketing mix and customer acquisition mix might be. Okay,
well, that's interesting. So I'm going to change topics here because we're quickly running out of time. Blockchain. Blockchain's kind of a hot topic. It's overhyped in my opinion, but I do believe that there's a thing there. There's something about it, and how it manifests itself over time, I don't know. But there is a lot of movement in trade finance specifically for transparency and tracking. R3, Corda, they have a big project going on. Maybe some of you guys are involved with that. IBM's working on a project that's gotten some traction. So there's a lot of talk. There seems to be some traction. So I'm going to, Cedric Brew, since you are working with big corp, is this something that you're doing now? It's on your radar. You're considering. You don't care. It's too easy right now. Why get into something else? I mean, what is blockchain for you? Is it a thing or not so much?
Not so much, as a matter of fact.
Okay.
So I love the technology. I think that it's great, especially for contained environment. When you know exactly what's in the blockchain, it doesn't change. There are rules to create tokens, for example. I think it makes a lot of sense. For that reason, crypto is the perfect application for the blockchain. Now, in our world, we put a lot of data in, coming from those large corporates. And I think that distributed databases can do the same job as the blockchain. So in that regard, we don't believe that blockchain can add a lot of integrity to the systems. So we are monitoring. We looked at Corda, and we looked at the different initiatives that are going on. But we believe that there is integrity for the data we get in. So what is much more interesting for us is actually the AI we can build on top of the data. And happy to talk about AI.
We're going to talk about that in a second, right? Because I know that. So the other Cedric, are you doing anything with blockchain? Not so much?
We tried at some point about a couple of years ago. We tried to do something on blockchain, but eventually the issue is, you need to have such a huge amount of people actually using the blockchain for it to be efficient for your business model. It's true the blockchain actually can alleviate a number of risks that Federico mentioned, the fraud risk, the validation of the invoices that you get actually from your clients. But it was too complicated, honestly, to scale. So
no value yet?
Not yet.
Federico?
Yeah, we had a similar experience. So like everyone else, I guess, we were hugely inspired by the whole ICO boom, and we had a thesis around blockchain. However, I think it's, our clients are traditional companies. And it seems very tough to get all the stakeholders on the blockchain. We have clients in Spain, for instance, which they sometimes ask, okay, what's the price in pesetas, right?
Yeah.
So it's pretty
Really, yeah.
traditional. So that's more than 10 years ago, introduction of the euro, right? So it's a pretty traditional, customer base, especially in the SME space. And I think it's one of those things which I think. We're monitoring it indeed, and I think if we can make better underwriting decisions using blockchain, or let's say, eventually it's financial service, right? So it's all about trust. So if we can take advantage of the blockchain in our risk decisions, I think we will definitely be doing so. So right now we're not convinced about the application, and also all the initiatives on the market. If you scratch a bit, they've all been launching pilots for 5 years. So maybe it's going to be something that is, going to be very highly valuable in 10 years, but I think it's a bit early.
Okay, now, Nelson, you actually have a relationship with Maersk, which is a really, really big shipping company. And I know that they're doing something. I don't know if you have anything to do with the blockchain thing, but aren't they working on something?
Sure. So at the moment, are we using blockchain technology at Modifi on a daily basis? No. A very, very simple answer.
Okay.
Is the platform designed to use blockchain rails? Yes, because I think over time there may be use cases. I think the most obvious use cases for the business we are in is sending money around the world, which is still completely broken, and basically have reliable data on when payments are being released through smart contracts, right? So those are the two obvious use cases in our business, I think, would be highly valuable. So on Maersk, Maersk and IBM, they are running the TradeLens blockchain program, and I was also a bit reluctant to see whether it actually, on what stage it is, I would say. And I was positively surprised. This thing is really up and running. They have connected an amazing amount of containers and ships already. So every single container, to my knowledge, of Maersk, and I think they're powering some 20-something% of world trade, actually have IoT devices on the container and actually send also the information to the network. And I think they have also signed up a couple of other large shipping companies who basically will join TradeLens and providing that data. So I think the infrastructure is in a better shape than I had expected. Yeah.
Okay.
The question really is, will this whole thing work if then financial institutions come into play and try to also become part of that network? Because every single institution, at least ones I have come across in 10 years of finance technology, is having their own underwriting policies, their own AML policies, their local requirements. So I think the beauty of a blockchain or distributed ledger and the reliance on information doesn't necessarily match the requirements of every single player, right? So I think that's probably where I see the practical issue. But TradeLens per se is pretty impressive.
So cautious observation, perhaps in the future there may be something there, but not yet because you don't need it. So I want to jump back to AI/ML because Cedric Brew, I know you guys are doing some things with that because data and integration key. You have a business model which is really cool, but now you're integrating AI and ML, right?
Yeah, so AI is the core of the platform for us, and we use AI for two main purposes. The first one is that we talk to some of our largest clients and trying to understand what they do for cash flow forecasting. And what we found out is that I think as consumers, we may do better at cash forecasting than some of the largest companies in the world.
That's disconcerting.
Yeah, I know. I think that they do a lot of top-down cash forecasting.
Right.
When it comes down to bottom-up, some of them will do cash forecasting 1 week ahead, 2 weeks ahead, maybe a month ahead. But to go beyond that, they don't have the data. Their data sits in many different ERP systems. It's very complicated to aggregate and then use to forecast the future. So one of the key products we have is to gather the data from all the ERP system of those customers. Some of those customers may have 10, 20, 30 SAP systems around the world, so there is complexity behind. And we use AI to predict when those payments are going to happen, being able to predict the likelihood that a purchase order will convert into an invoice and the likelihood that an invoice will translate into a payment. So that's the first use case we have. The second one is, as I mentioned, we have about 2 million businesses on our network, and the art for us is to predict the rate at which every business will be interested to get financing. In the early days of Taulia, we had a couple of people with a pencil trying to assess the risk of those businesses and predict the likelihood of financing. The network grew really quickly. We continued to hire. We had 20, 30 people to do this work manually. We figured out the hard way that it was not really scalable. So now we use AI to predict virtually at which rate every business around the world across industries and size will be interested in financing. So there is no more pencil or manual work anymore. Everything is done via AI.
So that's really cool. Cedric, Teissier, are you guys doing anything with it really quickly? I'm out of time.
Yes, clearly about 10% of the workforce of Finexkap is data science. So we do it actually multidimensionally, I would say. We do it, first of all, to automate the processes because, as I mentioned, it's crucial to think about the unit margins of a financing. Okay. So it's an automation of the underwriting, I would say. Then we do it because we have a business model which is very much B2B2B driven as we work with partners. We do it to optimize the sales and marketing efficiencies of our partners. So we look at the transactional data of our partners historically, and we predict, for example, that let's say we work with a large, I don't know, like industrial company. We predict that they should do a sale of that product at that point in time because people will actually buy it without financing. So that's second thing. And thirdly, we do it to build a graph. You mentioned that a little bit, Federico, but to build a graph of people and relationships. Because clearly, and that can be like companies, directors, shareholders, employees, because clearly the biggest risk for us is fraud. And that network allows you actually to identify the most cases of fraud, yes.
Okay, so I have a lot more questions that I don't have time to ask. I know these guys will be around the rest of the day, so I'm going to have a chance to ask some questions, and you will as well. But we need to cut this off now, so please give a big round of applause for the Trade Finance panel. Thank you very much, guys. Excellent job.